Joining us, I'm Chimeze Obi Iwagu. The Monetary Policy Committee of the Central Bank, which started its meeting on Monday, of course, ends that meeting today. The meeting, which is the third one this year, is coming at a time of fascinating developments in the domestic and external economy. At the last MPC meeting in March, members voted to retain all monetary policy parameters with MPR at 11.5%. The Central Bank Governor Godwin Emefiele will be briefing on the outcome of the meeting in about an hour from now. But first, let's look at the intraday market numbers. And here in Africa, there's a mixed sentiment amongst the markets we track. Here in Nigeria, the all-share index was in the red, down 0.07%, but the JSE index in South Africa was up 0.38%, making it the only gainer at intraday. Elsewhere, Egypt was in the red, down heavily at 2.09%. Kenya closed in the green on Monday. And in Europe, stocks advanced in the morning as easing inflation fears lifted global market sentiment. Germany's DAX was the standout performer among major markets, jumping out to an all-time high. Let's hear more from Conrad, who is at the Frankfurt Stock Exchange now. Hello, Conrad. Good afternoon. Good to see you.
Good afternoon, Chimmy. Thanks for having me back on Channels TV.
Right, so Germany's economy contracted by 1.8% in the first quarter this year. That's compared to the last quarter of 2020. Still, the German share index DAX managed to reach a new record high. How does this go together?
Yes, Jimmy, it is really a bit strange. Germany's economy contracting even a bit more than anticipated with, as you said, 1.8% compared to the last quarter of last year. At the same time, our German share index DAX nicely climbing to a new record high this morning. Obviously, investors believe that after the slow start of our economy in the first quarter, the recovery will be even stronger now that the vaccination programs here in Germany are finally underway. Let's not forget, the German manufacturers are working at full capacity. Some of them even find it difficult to deliver to the high demand because of supply problems. It is the services sector, restaurants, retailers, wholesale shops, which are lagging behind. But really for them, it's also only a matter of time that they can fully reopen now that more and more people here in Germany are getting not only the first jab, but also the second vaccination jab against the COVID-19 virus.
Well, Conrad, our conversation is going to be a very short one. Like I said earlier, today is our Monetary Policy Committee decision day, and we have a lot of conversations to do here on the program. So we will continue with those discussions from Germany tomorrow. Enjoy the rest of the day.
Thank you.
And in the UK, April borrowing reaches second highest ever, but lower than last year. That's the major data out today. Let's see how the markets are reading this data this intraday. Let's bring in Juliana now. Hello, Juliana. Good afternoon. Well, despite continued high levels of borrowing, today's data continued the run of better news on the public finances, with borrowing much lower than the OBR forecast in March. How is this data being interpreted by market players and investors?
Well, as soon as the FTSE opened, it opened in negative territory. Last time we checked, it's just slightly nudged into positive territory. And as you said, even though the April borrowing has come in slightly better than the Office for Budget Responsibility had projected, it's still eye-wateringly high. And unfortunately for the British government, the tax receipts, which came in at about £54 billion, isn't enough to nudge down these numbers. Government borrowing currently stands at about 98.8% of GDP, which is over £2 trillion. So Rishi Sunak will hope and pray that once the 4.2 million people still being supported by the furlough scheme go back to work, then those tax receipts can start coming up. So the FTSE All-Share is up 0.03%. The FTSE 100 at intraday is down 0.04%, and the FTSE 250 is up by 0.14%. In the currencies market, the British pound is up on the US US dollar by 0.05%, down on the euro by 0.25%, and up on the Japanese yen by 0.23%.
All right, Juliana, we'll leave it at that. We'll continue the conversation tomorrow. Enjoy the rest of the day.
Thank you.
Well, in the last 1 week, central bankers in sub-Saharan Africa countries have been meeting for their policy-setting meeting as a slow rollout of COVID-19 vaccines means their economies remain vulnerable to a new wave of the virus. After monetary policy committees in Mozambique, Zambia and Zimbabwe were the first globally to hike this year, chances increase that a new wave of infections and extended lockdowns could further weigh on the recovery of a region where gross domestic product slumped the most in a quarter century last year. That and inflation that's pushed up supply side and currency constraints in countries such as Nigeria and Angola are also key talking points in interest rate deliberations that kicked off last week. Here are what some of them have done and what is expected from those yet to decide. Let's look at South Africa, for instance. The South Africans MPC meeting met on May 20 and left the benchmark rate at a record low for a fifth straight meeting, even as inflation breaches 4.5%, where it prefers to anchor expectations this quarter. Now, the central bank's quarterly projection model, which the MPC uses as a guide in March, indicated one rate increase of 25 basis points this quarter, followed by another in the fourth quarter. However, the governor of the central bank said last month policymakers see risks to the inflation outlook as balanced and feel that they can continue to offer support to Africa's most industrialized economy. Okay, let's look at Kenya. Kenya Central Bank monetary policy meeting is tomorrow, May 26, and it is expected to keep its policy rate unchanged for 2021. Razia Khan, chief economist for Africa and the Middle East at Standard Chartered Bank, said while COVID-19 related shocks are a source of downside risk, a lot more economic activity is preserved versus last year. According to her, it would take a more significant downside shock to justify further easing. For now, lower demand that is countering the effect of rising oil prices means the rate could remain stable through 2021. That's for Kenya. Let's look at Angola. Angolan policy makers are also likely to hold the key rate when they meet on May 28, even as the country contends with inflation at the highest level in more than 3 years. That's because a lot of the price pressures are seen as imported, and the pass-through from the central bank rate to inflation and consumer demand in Africa's second biggest oil producer is weak. Angola's April inflation came out at 27.66%. And of course, our neighboring country here, Ghana, the Bank of Ghana's Monetary Policy Committee will be meeting from tomorrow, May 26 to 28. However, the bank will brief on its outcome on May 31. At its last meeting, the bank kept its policy rate unchanged at 14.5%. Explaining the rationale behind the policy rate decision, the governor of the bank explained the 2021 budget presented by the government has set fiscal policy on an adjustment path. Ghana Central Bank cut rates once last year, and it's expected to hold for now. And here in Nigeria, the MPC meeting started yesterday and the decision will be announced shortly. And while some analysts see a little hike in rate, others believe that the slow pickup in growth could reinforce the central bank governor Godwin Emefiele's view that it's still too early to increase the key interest rates from 11.5%. Joining me now to have this conversation is the Director General, Lagos Chamber of Commerce and Industry, Dr. Muda Yusuf, and of course the Head of Portfolio Management at Commercio Partners, Victor Aluyi. Thank you very much, gentlemen, for joining me.
Thank you.
Thank you, Dr. Yusuf.
Great.
Okay, well, I start off with you. We have seen slow rollout of COVID-19 vaccines across Africa, which means their economies remain vulnerable to a new wave of the virus. There is also the potential of inflation pressures in the U.S. How much of concerns do you think these external factors would present for CBN's MPC meeting at their meeting today?
Well, I think the key factors to worry about are actually the domestic economic conditions. You'll be looking at what the CBN has been trying to do over the last couple of months, especially trying to get the economy back on its feet, trying to pull the economy out of recession, stimulating growth. And the emphasis has consistently, over the past 1 year or so, been on how to stimulate growth. And now that we are beginning to see some indications of positive growth, even though very marginal, still very fragile, I think that may be a consideration, especially now that we are now having an inflationary environment that is becoming more intense. Inflation at 18.12% as at April is quite high. Food inflation at almost 23% is quite high. So my sense is that at this point, I think the CBN may begin to worry about inflationary issues rather than issues of growth. Don't forget the primary mandate of the central bank is price stability. And now that we are facing this kind of risk to price stability, I think that the CBN at this time will be looking more in the direction of stabilizing prices rather than issues of stimulating growth. Because quite a lot had happened in the area of quantitative easing, in the area of accommodative monetary policy, and all of that.
Like
and
we
of course,
see,
you can see
the things that have happened even globally.
Yes, globally. I mean, because the global environment is also looking fairly okay. Looking at the effect on commodity prices and all of, because the greatest exposure we have to the global environment is in the area of commodity prices. The kind of shocks that comes from oil price. And now with what we are seeing, I think the situation is beginning to moderate, even though there are concerns about this third wave and all of that. But obviously, it's not as bad as it was last year. So the external environment is looking a bit, there a bit of calm is being restored in the external environment. But the domestic environment, I think, is a much bigger issue.
To worry
Yes,
about.
yes.
Okay, let me talk to Victor. Victor, what do you think the central bank would do, considering first money supply, the marginal dip in the rate of inflation, the sluggish GDP growth rate, and of course the declining external reserves?
Yeah, so I think that what the committee does would be largely data dependent. And we've seen a moderation in inflation, albeit that number remains high. In terms of the output growth, we just saw the Q1 2021 GDP number at 0.51, which is still something you describe as a nascent recovery. And clearly the mandate of the CBN is price stability. So I think that the recent moderation in inflation, the continued output expansion or GDP growth, albeit weak, I think would give some impetus to the committee to hold all parameters as they are, and essentially just continue to monitor the situation and see how things pan out. So I think that the committee is likely to vote to maintain. If you look at the trajectory of the committee at its January meeting, it was a unanimous decision to hold all parameters. But if you look at the minutes of the March meeting, about a third of the members actually voted to increase the benchmark MPR rate, and that was just on the back of concerns around that inflation number that was basically tearing away. But I think with the moderation that we saw from the last number and the continued growth in output expansion, albeit weak, I think all these factors or these numbers would give the Apex Bank some impetus to hold all the parameters as they are and essentially weigh things and see how things pan out going forward. So is this moderation in inflation, is it a blip? Are we going to see inflation moderate even further? And, all of that. Also, the exchange rate situation is quite critical, and that has remained, the elephant in the room for quite some time now. The Apex Bank has adopted a number of policy measures to make adjustments to that official rate, but that doesn't seem quite strong enough to assuage the concerns
Victor.
of investors at this time.
Okay, hold it. They're talking about the exchange rate. We'll take a short break and then we'll be back and we'll continue with this conversation. Just stay with us. Thank you for staying tuned. You're still watching BizInc Special today, and it is indeed a special one because we are looking at Nigeria's monetary policy environment. Well, just before we went on break, Victor Aluyi there talked about the foreign exchange market, which has been a major challenge for a lot of businesses, for everybody indeed. And this morning, when I looked at the central bank's website, we saw that the CBN has officially, adopted the NAFEX rate of 410. There has been a controversy around this. Remember when a report said that the finance minister had said that this happened, and then the CBN said, no, this didn't happen, and all of that. And then suddenly the central bank removed the official rate. And then now we are seeing the NAFEX rate. What does this tell you?
Well, I think it's pointing in the direction that we are beginning to see some reforms around the foreign exchange.
Perhaps the much clamored migration,
migration
to the single exchange rate.
Exactly. Because we have been on this conversation around convergence for a very long time. Because we believe that it is this convergence that will bring some stability, some predictability, and that will also even enhance liquidity in the foreign exchange market. Even though, as we speak, one of the biggest problems that businesses face in the monetary space is this FX problem. Two dimensions of this problem. The first is the liquidity, because what that tells you is that you can't get it when you need it, irrespective of what you can't just get it. The second is the depreciation. Even though we talk about NAFEX rate as at 410, 411, the open market, or what we call parallel market or BDC rates, is about 486 or 485. You can see the huge premium. And many transactions, including FX transactions by corporates, many of them are going for even 500 naira to the dollar. That is the reality that we are dealing with on the ground. So, and this has been reflecting in some of the challenges we have seen in the economy, in terms of the capacity of business to continue to sustain investment, in terms of the inflationary pressure, purchasing power, capacity utilization, inventory accumulation, and all of that. So it remains a very, very big issue for investors. So it is a welcome development that the CBN at least is responding to the clamor for a convergence. At least, even if it is reluctantly, at least we are beginning to see some movement in that direction.
But availability is also
yes,
a
availability
is
still a challenge. But this is a first major step towards ensuring availability, because availability is also a function of confidence. Because if people are bringing money into your economy
and they are not able to take it out,
they are not able to take it out, they are not sure what the exchange rate policy is and all of that. All those things will fizzle out the moment we move closer to much bigger convergence. So it's a good signal that we are seeing from the CBN around this forex regime, but we need to accelerate the pace of this reform. Because for me, it's a major reform, and it's a reform that is desirable in order to bring some level of predictability, certainty and to reduce the risk of investment in this environment.
Okay, I guess we have quite a lot to talk about this FX market. But
Yeah.
in the meantime, let me ask Victor. Now, central banks all over the world always face a monetary policy dilemma. Do you think there will be any trade-offs between any of these considerations that we have talked about?
Well, I think that there are all significant issues that the Apex Bank has to deal with. The FX challenge, on the one hand, that has been with us for quite some time now, and just like Mr. Yusuf has alluded to, there are significant reforms that need to be carried out within that space. It's important that the Apex Bank continues to pursue that convergence that would ensure liquidity, that will ensure transparency in that market. If we look back at the last time we had a major policy move within that market, which was the creation of the I and E FX window, we saw significant accretion to the economy. We saw significant transparency, and we saw significant improvements, although short-lived. But that was what that reform at the time was able to do. So it's important that the Apex Bank continues to reform in this area. It's not a simple situation. It's the bank is faced with the reserve situation that we see continuing to dwindle, even in the face of rising crude prices, and that is essentially on the back of production cuts as a result of these OPEC quotas, and also the compensation that Nigeria has had to do for overproduction sometime last year. So the FX situation for me is a major one that the bank has to deal with, because it will open up a lot of things, particularly with the growth of the non-oil sector in the areas of manufacturing, in the areas of service situation, creating liquidity in that market, creating transparency in that market through policy initiatives and moves will certainly bode well, not just for the FX market, but for the economy as a whole. So I think it's extremely important that the committee continues to strive to achieve convergence in this market.
Thank you very much, Victor. And of course, thank you very much, Mr. Yusuf. This conversation continues in a short while. But for now, that's where we draw the curtain on today's edition of BizInc Special. Of course, we'll continue with the MPC decision at 2 o'clock. Thank you for watching. I'm Chimezie Obi Iwagu.
The nation's